So we've come to the last sum in statement of cash flows. So this is again a lengthy problem. So we'll go again through a step-by-step approach like how we went through the last sum. So here we have the statement of financial position. Okay. So we have non-current assets, accumulated depreciation. Both are given like separately. So if there's any working note, we have to do it both separately. We have current assets like inventory, trade receivable, dividend receivable, and cash. So cash we have to use in the statement of cash flow as the opening and closing balance. There is also like dividend receivable, which seems to be like odd because normally it won't be there. On the equity and liability side, we have share capital and share premium and revaluation surplus. So revaluation surplus is something that is new. So what is revaluation surplus? Revaluation surplus refers to increase in the worth of asset. Okay. So just like depreciation, it is the opposite. Sometimes the worth of an asset actually goes much higher. So usually this doesn't happen with machine or buildings. Okay. It happens with land, because land which is like purchased several years ago, when we try to value it, it might be sometimes much more higher. Okay. So it can be increase in the value of asset. So we have retained earnings, so that is like reserve. Then we have a loan, trade payables, that is outstanding interest, which is interest accrual, and tax payable is there. And on the SOPL side, we have sales revenue, cost of sales, gross profit, operating expense, and operating profit is like directly given. Okay. We have other several numbers like investment income, interest and dividend, both these are income. Finance charge is there, so that should be the interest, and income tax is there. So we already saw that if there is a number which is like available in SOPL and SOFP. Okay, for example, income tax is here, tax payable is also here. Okay, so we should not consider this as a current asset, current liability. We should work out and try to find out what is the actual cash tax which is paid. Okay, so that is what is like given. So we should open a income tax account, and then we have to find out. Okay, and also there are like several numbers here. So if there's any payable there, so interest accrual is there, so we should also open interest paid account. Okay, that also we have to work out. And also if you see, there is dividend receivable. Okay, so dividend receivable account also we have to receivable account also we have to open. So three accounts we have to open. And I think interest income alone we don't need to have to open any account, because it's like just only given in SOPL, so we don't need to worry about that. Then they tell you operating expenses include 5,000 on disposal of non-current asset. Okay, so the operating expense here, this includes a 5,000 which is a non-cash expense. And during the year, an item of plant was disposed of. The plant originally cost 80,000. Okay, so the original cost of it is 80,000. Accumulated depreciation is 15,000. So its real worth is how much? Its real worth would be 65. Okay, that asset I think would have sold at a loss. So what is the adjustment here? I think you could open an account here also. Okay, we could open an account here also. So these are the accounts that we have to initially open. Okay, so we'll start. So we'll start with the format here. So we have like several numbers. So first we'll set up all these elements so that it's like quite easy for us. Okay, so we have already opened certain accounts like income tax payable account, interest payable account, dividend receivable account we have opened. Non-current asset and disposal account, accumulated depreciation we have opened. Okay, retained earnings we have opened. So just as formats we have them. Okay, so only when we do it we will try to know like what is happening. Okay, so we'll start from in last problem I think we started from SOPL. Okay, if you want we could use that itself as an approach. So we could actually start from that point. So we can start. Okay, so let's start. Which number we have to take? See, first number that we want is the we require okay, we require profit before interest and tax. That is the number we want. So this number is profit after tax, okay, and interest. So this number is profit. We have to add back income tax and finance charge. Okay, first we have to do that, then only we'll get the answer. So I think we will put it here itself. We don't need to, it's only up to us to show it separately, or we could show it here itself. Okay, so better I think we'll show it here itself. So we'll add income tax, okay, and we'll add, first we'll add income tax. So profit before tax has been 92. With that we'll add income tax, which is 71. We'll add back the interest, okay, so interest is 22. We added that. Okay, so we got, so what we opened with was profit after interest and tax. So now we got the first number. Okay, we got the first number. From here on we have other numbers. So we have to add back this numbers also. Okay, we have to add back this numbers also. Not add back, we have to reduce, because these numbers are not business income. Okay, these are not business income, so we have to add back that too. Okay, we have to reduce it actually, sorry, we have to reduce non-operating income. Okay, so non-operating income are two things there. One is interest and other one is dividend. Okay, so we add it back here. Okay, but we'll show this interest income and dividend income as a investing, as an investing income heading, we'll show it. Okay, so that's why we are not considering them here. So we have to less the interest 15 and the dividend 57. Okay, so as we are doing it now, we will immediately take these numbers and we'll also put it in some other area. So we'll put it like this: div interest. Okay, interest and dividend, we have to take them out. So we'll take them out, and we have come up to the operating income. I think we have come here, but this includes two more things. Okay, this includes two more things. So the two more things are depreciation. Definitely depreciation would be there. Okay, but it would be in some working note. So it is in some working note. We have to first work it out, and we have to add back the loss on disposal of asset. So that we have to add back. So loss on disposal of asset is like very clear, it's 5. Okay, so this alone we have to work out. So should we work it out now or later? Okay, so when we go to SOFP, I think we will try to get that. So I think up to our SOPL, it's like mostly over. I think we can go to our SOFP. Okay, so SOFP, if you look at, they say that there's a non-current asset for 1048 and 750. Okay, and they have also sold an asset which is originally costing 80. So what does this mean? So first we'll open an asset account. Okay, so first we'll open an asset account. The total asset that has been purchased in the year is, that's not given. Okay, that is not given. So better we'll put like this. So the opening of assets is 750. Okay, and from that they have sold sale of asset. Okay, some asset has been sold, so we'll put it as less. Okay, so how much worth of asset has been sold? See, 80 worth of asset has been sold, so minus 80. So 670 should have been the balance. Okay, closing balance. But if you look, the closing balance is 1048. Okay, it is 1048. Now the difference between these numbers, okay, the difference between the adjusted number, okay, what should have been and what is there. Okay, so we'll just like have it like this. Okay, 670 should have been the closing balance, but closing balance seems to be 1048. Okay, so it means asset purchased, right? So they have purchased asset for how much? They have purchased for, currently it's 1048. Okay, it should have been 670. So they have purchased assets for 378. Okay, so we'll first check that. Okay, they have purchased for 378. So as of now, we'll just like mark it. Okay, and we'll also take this C378 and we'll put it in the asset purchased. Okay, so purchase of I think asset itself we could put, or property plant. Okay, purchase of NCA non-current asset is, value is 378. Okay, so as it is purchased, it should be a negative number. So done. So asset is over. Next is accumulated depreciation. So accumulated depreciation is 120 and then it become 190. So we'll just work out for accumulated depreciation. So the current depreciation for the year we don't know. Okay, what it is we don't know. But opening accumulated depreciation, okay, the opening depreciation was, I think it was somewhere here. It was 120. Okay, closing is 190. Okay, closing is 190. So the depreciation for the year, okay, should have been the addition. Okay, the addition is like 70 is the difference between the opening and closing. So I think depreciation for the year should have been 70. But if you see, there is a disposal of an asset. So accumulated depreciation on the date of disposal was 15,000. Okay, so from the opening, okay, from the opening, there has been a reduction of disposal, okay, or depreciation on disposal of asset. Okay, so that actually comes to 15. Okay, 15. So the balance, who should be, okay, should be 105, but it is 190. Okay, so it refers to that depreciation alone is around some 85. Okay, so depreciation is 85. So depreciation for the year, this is the balancing figure. Okay, this is the balancing figure. So sorry, okay, this should have been 105. So closing is 190. So the difference between these two numbers, 85, is the current year depreciation. So current year depreciation we have to add to our operating cash flow calculation. So we have added that. So our second item is over. So we have the disposal account. Okay, look at the disposal account. We have sold 80 worth of an asset. Okay, the depreciation on that particular machine was, okay, sale. Okay, this is the okay, it's at the original value. So original value is 80 and depreciation on it is 15. Okay, so that's both they have given. So the machine value is 80 and the depreciation on that is 15. Okay, and the loss on that machine is 5. Okay, so what is the current value of the machine? Okay, is it first of all a machine or asset? Okay, it's a NCA. Just tell it as an NCA. So we'll put it as an NCA itself. Current value of NCA is 65. Okay, is 65, and the loss on, okay, the loss on sale of NCA, that amount he tells as 5. Okay, that amount they tell as 5. So at what rate have they sold? Okay, it's really worth 65. Okay, but it has a loss of 5. Okay, it has a loss of 5. So what would be the balancing figure? The balancing figure is the, okay, sale, okay, or cash sale of NCA. Okay, this is the sale at which they have done. So 60 is the rate, okay, 60 is the value, 5 is the loss they have got. So at what price they have sold? They should have sold at 60. Okay, 65 worth of asset they have sold at 60, so they have incurred a loss of 5. Where should this 5 go? Okay, see, 5, I think we have accommodated it, we have put it, but where should the 60 go? That is the question, because that is the balancing figure. Okay, all other items we'll unbold them, we don't need to bold them at all. Okay, this is the most important number, 60. So 60 is the proceeds of sale of NCA. So 60 is the asset that has been sold. Okay, so we got that. Okay, that's the value of the asset. So I think we have finished up to accumulated depreciation and the notes. I think all of that we finished. We now move to inventory. Okay, so we don't have much numbers here. Okay, we don't have much numbers. The numbers that we have are inventory. So inventory is 98 and 105. Okay, trade receivables will use a separate account. Dividend receivable we will have a separate account. So inventory is the only asset increase or decrease. Okay, so we have to show that as a working. So we'll copy from the last sum. We'll copy from the last sum. So we have inventory. Okay, so if you see here, last year it was 105. This year they have sold inventory. Okay, they have reduced their inventory. So this would have resulted in cash inflow. Okay, this would have resulted in cash inflow. So you can go to the operating statement. Okay, sorry, the operating cash flow calculation. So 7 is a cash inflow. Okay, so what about the liability side? Okay, I think we'll also do the liability side. So cash is there. Okay, cash is there. First we'll finish off that. Cash has a opening and closing balance. So opening is 18, closing is 42. So we'll accommodate that. So opening is 18 and the closing is 42. Let's see whether we get that number. Okay, so that we got. So the next number that we have is trade receivables. Okay, before doing trade receivables, I think we'll finish first current liability and we'll come to trade receivables. Okay, we are at inventory, then we'll do trade receivables, and we'll do first liability. So in liability, see, interest we have to open a separate account. We have mentioned that. Tax payable we will open a separate account. Okay, because there is again tax number separately there. So we'll open a separate account. And so the only thing that is remaining is tax, is trade payables. Okay, the amount comes to 77 and 79. 77 and 79. 2005 and 6. I think years we have to change. 5, 6. Okay, so if you see here, last year it was 79, this year it is 77. So earlier we used to get 79 of money, free money from others, but now it is reduced. So we are, our money, the free money that we got is like reducing. Okay, it means that we are paying our suppliers correctly. So there is the outflow of cash, so that is the -2. Okay, so that is -2. So we got till that, and now we'll open the accounts. Okay, we'll open accounts. So totally we'll open, first we'll open dividend receivable. Okay, dividend receivable we'll open. We have here, so the opening for dividend receivable is 50, closing is 57. Okay, and for the current year dividend receivable is 57. Okay, it is 57. So what does this mean? Okay, so we had to receive 50 earlier. This year we are going to receive 57. Okay, put together we have to receive 104. Okay, but 57 is what is still pending. Okay, 57 is what is the only thing which is pending. So we would have received the balance. So dividend received in the, okay, dividend or cash dividend received is 50, right? So we'll go to the dividend received part and we'll put first this. So dividend received for the year is 50, and it's a cash inflow, right? So we'll go to the next one and we'll do the similar thing. So dividend is over, we'll go to interest accrued. Okay, so interest accrued is, we have here, so opening is 5, 3, closing is 3, and interest for the year is finance charge of 22. So what does this mean? See, we have to pay 5 last year itself, 22 this year, totally 27 we have to pay. But at the end of the year they say that only 3 has to be paid. So what does it mean? So it means that we have paid some interest. How much we have paid? The opening plus current year interest 27 minus 3, that is still pending. So what we have paid is, so cash interest paid is 24. So that 24, that interest paid, so you can show interest paid here itself, minus 24. You can also can be shown in financing cash flow. You can also show it there. Okay, so we'll mark it as an important point. You can also show that, that's not a problem, right? So see, we have also already put it as a, okay, sorry, we have shown here. So the next number is tax payable. So income tax, last year it was 67, this year it was 76, right? And the current income tax is 71. So 71. So what does it mean? 71 plus 67, we have to pay tax of 138 totally. But at the end of the year, the tax authorities say that 76 only has to be paid. What does it mean? We have paid some tax. So the cash tax paid is only 62 we have paid. Okay, so income tax paid is 62. So done with that. So still anything left? A lot is left. Okay, because we are not done anything like exactly. So inventory is over, dividend receive, so trade receivable is over, dividend receivable is over, cash is over. So I think overall on this side everything is like over. Asset side is totally over. SOPL side is totally over. Okay, and adjustments are also over. We are like almost like completing. Okay, current liability side, trade payable we have taken, interest accrual payable we have taken. The only things we have to taken is the equity and non-current liability. Okay, so we'll start with non-current liability. So non-current liability is loan. Okay, last year it was 300, this year it is only 200. That means it's reduced. So we'll go to the financing cash flow. So repayment of loan, 300 minus 200. Okay, so 100 has been paid. So loan is over. So the only part we have is the equity side. Okay, so share capital is, we'll put it like this. Okay, so share capital has been 200, sorry, 120 last year, 200 this year. So we have issued some shares, and shares have been issued at a premium because last year it was just 80, this year it was 106. So again both we have to show. So we'll go to issue of shares. So it is here. Okay, 106. So we got that. So the next item is premium is over. So two more items are there. So we have revaluation surplus. What is revaluation surplus? The increase in the worth of an asset. So we'll go to the non-current asset. So opening was 750. Some asset has been sold. Okay, and we have to add one more item here. We have to add one more item here. What item is that? That item is revaluation. So add revaluation. Add that revaluation. Okay, so revaluation if you take, last year it was 12, this year it was 212. So the number would be 212 minus 12. Okay, so totally 200 worth of assets have been added. Okay, so our balance would be the sum of the balance is 870. So 870 worth of assets should have been, but the closing is much more higher. It shows 1048. So the difference between 1048 and 780 is 178. We have already shown asset purchased to be 378. So that is wrong. We have not taken the revaluation into account. So it's just 178. So the next step is retained earnings. Okay, so retained earnings, if you see, the difference seems to be 283 minus 226. Okay, so that's a difference. Okay, we don't need to, I don't think we have to put it like that. We can go to the retained earnings account. Okay, so we'll start. So the opening, so the opening of retained earnings is 226 and the closing is 283. Okay, so add the profit after interest and tax. This number should get tallied. So 92 is the profit for the year. add that number, you should get the answer. Okay, so add both. I got 318. Okay, so the total of both these numbers is 318. Okay, so the total of both this number and this number is 318, but what I'm getting is not 318. Okay, if I deduct 283 is missing. Okay, so 35 is missing. What is this missing number? See, this missing number is dividend. Okay, that is not given in the sum, but the missing number is dividend. So dividend, this number is a balancing figure. This number is a balancing figure. So 35, we have to put it as dividend paid. So where is dividend paid? Okay, so here we have. So if you check the working note, we'll get the answer. So our number is 35, I think. Okay, it is paid, so it is minus 35. So it is minus 35. Okay, so let's first finish the operating cash flow so that we'll get the answer. So we can just directly sum it because we have taken the symbols perfectly. Okay, so 307 should be the net operating cash flow. Okay, so cash flow generated from operations. Okay, let's see the answer. I don't know what the answer is. Okay, sorry, we should not be like adding all, because we should have been adding up to here only. Okay, because up to here we have to add. Okay, so as per my calculation, this comes to 122. So this and all you can show it in the inside column, and the total alone you can show it in the outside column. So this total comes to minus 68. And this also you can show in the inner column. So this comes to minus 29. Okay, so let's get the sum. Okay, answer should be 42. We get 43. Let's check like where it's wrong. Okay, so we'll just check whether we have done all the numbers and we have taken. So we have taken almost all the numbers. Okay, I think interest income, I think we have not taken. Okay, interest income, we have deducted it. Okay, we have deducted it from somewhere. See, but we have not shown in the investing. So interest received should be shown, and that comes to 15. So add all this, we get 53 as minus. So it is minus 53. Okay, so we got a much more different answer. And one more thing that we made a mistake is in the calculation of current asset. So let's bring this number a little bit lower, way lower. Okay, very lower. Okay, we'll put it here. So the current assets that we had are inventory and trade receivables. So that should have been both inventory and trade receivables that we have missed. So trade receivables is 102 and 86 and 86. Let's get the number right. Okay, so the total is 9. So what does it mean? Last year we have only 191 of asset, but this year we have increased the asset. So we have increased the asset by 9. So it is our cash is locked. So it's outflow of cash now. Okay, it's an outflow of cash. So outflow means it's a minus number. So it is a -9 we have to show. So where should we show it? We should show here. So we should show it here. It is -9. Okay, so the answer comes to 106. So operating cash flow is 106. So we put that there, and voila, our answer is perfect. Okay, so how did we miss the answer? Okay, the reason why we missed the answer is somewhere I was not like perfectly going through all the numbers. Okay, so tackle them perfectly. Okay, so that it like neatly comes. If you tackle it wrongly or you miss it, the problem is like I missed the invested income to be put here, but I correctly deducted it from operating cash side, but I also noted it, but I didn't put it. Okay, I thought I put it, but I missed it. And in terms of inventory, I think by oversight I left the trade receivables, by oversight I've left it. Okay, and now I think we got the answer exactly. It has to be 24. I'll still check the answer. So I'll just check the answer. I don't know what's the answer. Yes, it's perfect. Okay, so that is about the answer here. If you want, I will repeat it once more. So we have sales revenue, cost of sales, okay, gross profit, operating profit. What we first need is the profit after interest and tax. Okay, so that is already given by us 92. We want profit before interest and tax, so we add back the income tax and interest. We got that number. Then we have to reduce some non-operating income and non-operating okay, we have to eliminate some non-operating income. We have two non-operating income, so we took out that out. And we had some non-cash depreciation are there. So non-cash expenses are there. So depreciation we have to might be there. Okay, and loss on disposal of asset is like clearly given in the question in here itself. So we added that back, and then we have to work out current asset and current liability. So that also we could work out. So thereafter we went to non-current assets. Okay, in non-current assets we had a idea like this. See, 750 was opening, 80 has been sold, revaluation has been 200, balance should have been 870, but closing is 1048. So what has happened? 178 has been purchased. So accumulated depreciation, if you see, 120 was opening. Okay, some asset has been sold, so 15 depreciation has taken out. 105 should have been the balance, but closing is 190. The difference is the depreciation for the current year, which is 85. So once we got that depreciation, we added it in this particular area. Okay, so that's about that number. Then we worked out interest payable, income tax payable, dividend receivable. All these three elements are like similar. Okay, that we worked out. Okay, disposal on non-current asset. They say that an asset of original value of 80 has been sold. Okay, at what rate they have sold, they have not given. Depreciation has been 15. Okay, that also they have given. So the current worth of the NCA is only 65. They say that it has incurred a loss of 5. It means they have sold the asset for 60. So that also we have accounted. here, and interest received, dividend received, and all we have accounted here. Okay, and any dividend paid, sorry, not dividend paid, interest paid. So interest paid and income tax paid, we have shown it here. Okay, so that working notes we have shown it here. So what we originally added and what we are deducting is like quite different, because what we added was the P&L item, income tax, interest we added, and what we are deducting now is the cash interest and income tax. That's what we are deducting. Okay, so thereafter we had uh, mm, okay, thereafter we had the current asset, current liability adjustments. Okay, so that inventory, trade receivable, and trade payables we adjusted. Then we try to find out what would be the equity side. So there was a loan. So there was a loan, and that loan we have repaid. So that we have taken into account. Then share has been issued at a premium. That also we have taken into account. Then we try to find out a revaluation surplus that we accounted here. Here, okay. And the total asset purchased was only 178, not 378. And then we went for retained earnings. So retained earnings is opening was 226, profit was 92. Put together they should come to total of 318, but only 283 is there. The balancing 35, okay, the balancing 35 number is the dividend paid. Okay, the dividend paid. So dividend paid we have accounted as a cash outflow. Okay, we have taken it as a cash outflow, dividend paid in financing activity. So 35. So thereafter we started closing. Okay, we closed first the operating cash flow. So we initially got PBIT. From there we adjusted depreciation, loss on disposal, increase and decrease in current asset, current liability. We got cash from operations. We had some working notes for this, and we got net cash flow from operations. We took this number and we put it here. Okay, and from there we adjusted all these numbers put together. We showed it as cash flow from investing activity. These numbers we added and we showed outside as cash flow from financing activities. All these numbers we added together. Okay, that gives us the change in the increase or decrease in cash equivalents. That is 24. Opening was 18, so closing has to be 42. The opening and closing of cash is like given in the problem. Opening and closing are given in the problem. So I just wanted to check whether these numbers are tallying. So I have put a formula here. Okay, and finally I got the answer. Okay, so if you still want, you can show working notes. You can show working note number like 1, 2, 3, 4, 5, like that you can show. Okay, I'm not showing that here. Okay, I'm not showing that here. If you want, I could show. So I'll put it as 1, like that. Okay, so if you put working note, then you can put that numbers, relevant numbers here. Okay, like something like working note number 1, working note number 2, 3, 4, so that it's like very neat. Okay, but I'm not doing it now. So that's about this question. Okay, it is a lengthy question. It has taken 50 minutes for us to actually teach itself, and this is something like a 20 marks question that can easily come for a exam. Okay, so that's about this sum. Thank you very much for watching. Okay, and please watch like more videos and gain some knowledge. Thank you.